Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money and Patty Cohen of Compass Realty. Mark Conf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tanbella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And today's trivia theme is Rock Follies. Thought you'd get a kick out of that. All right. You know what? I'm going to
Rock Follies.
Rock Follies. You'll see when we get into the questions.
Right.
It's not a geology question. All right. You know what? I'm going to get right into email time because I know that the audience would be very interested to hear this. Patty, email comes in. What is this all about? Prop 19? Can you explain it?
Yeah. It's really a game changer potentially for the Bay Area. And it was a proposition that was passed in November, and it goes into it has to do with maintaining your low property tax basis, assuming that you have one. And it applies if you sell, and I'll get into the conditions of that. And it also applies if a property transfers. There's a death in the family, it transfers to a sibling or whoever. So currently, if you're over 55, you have a once-in-a-lifetime chance to hold on to your low property tax base. And what do we mean by that? So let's say you have a home that's worth $3 million. That's not very hard to have in the Bay Area.
Sure.
And you're there for 40 years. You might only be paying, $5,000 in taxes.
Yep.
And if you bought that house today, it would be, $30,000 a year in taxes.
Yeah.
So most people rambling around in a big $3 million, $5 million house, and it's been there for 40 years, I'm going to guess it's 1 or 2 people, and they're older, and they don't need that much space, and they want to shrink some of their expenses. So generally, the thing I hear most from people is, I'd like to stay in Marin, I just want a smaller house. Okay, smaller. How many do you have now? I have 4 bedrooms plus a den. But I want 3 bedrooms. Well, somehow people think that they can go from a 4-bedroom house to a 3-bedroom house and pay half. It doesn't work that way. It doesn't work that way, right?
Not exactly, no.
Yeah. So you're like, well, maybe I'll go to Napa, maybe I'll go to Sonoma, and I'll buy something for $1 million or $1.5 million. And it's like, well, too bad. Even though you're over 55, you're still going to pay property taxes on $1.5 million or $1 million, which is 10 or 15,000. So I can't take my low 5,000 tax bracket. No. There's only a few reciprocal counties per 1990. And those counties are places people just generally don't want to go. And there's only a couple of them. So now, as of April 17th of this year, you can, if you're over 55, you're disabled and a fire victim. Or a fire victim. Not and. You don't have to be all 3.
It's either
2 people qualify.
Yeah.
Either disabled or over 55 or a fire victim. Okay.
Yeah, I'm kidding about you have to qualify for all 3. Forget that.
Gotcha.
But anyway, so if you qualify for in any of those categories, and I'm really glad it's for the fire victims, because they didn't do that, and they had a house.
Exactly, that's not fair. Very good. That's very
Yep.
Yep.
So now you can do it up to 3 times in your lifetime, and it also used to be that you have to buy something below what you're selling.
Okay.
And that was a big deal because people couldn't find anything and whatever.
Yeah.
So now it can go above, but there's a sort of somewhat complicated algorithm for how that works. But you get credit for buying below and keeping that tax basis, and then you pay a portion of I'm getting complicated. But
but
really
it may be as simple. I don't remember if this is the law, but it's like if you had your $3 million house and you were paying $5,000, if you bought something for $3.5 million, they would say, okay, well, $3 million of it, you get to still pay the same tax, and it's the extra $500,000 that gets you normal. That's probably what it is.
Yeah, that's pretty much it.
It's not. I can't. Finally, the government has some common sense to them.
Some common sense.
Yeah.
Yes.
So let me ask you a question. If you're going from a $3 million house and you're paying $5,000 to, let's say $1.5 million, it's not like your property taxes are going to be reduced by half.
No.
It's going from 5,000 to 5,000.
Yeah. Do you pay the same 5?
Right, you're just going to keep that low tax bracket.
Yeah.
Yeah,
But here's where it's really a game changer, because before you pretty much had to stay in your county. So the problem is
Mhm.
the Bay Area, we're in Palo Alto, we're in San Francisco, we're in Marin. I can't find anything
Yeah.
that's going to bring it down. I still don't want that big house and a mortgage on it or whatever. I'm trying to get rid of my mortgage.
Well, you
Now
just want to be closer to kids.
I want to be closer to my
Yeah.
kids, exactly, anywhere. So now I can go anywhere in the county. I mean, in the state.
Yeah.
So you can go to Palm
That's
Desert. You can go anywhere.
Yeah, that's a really good. That's common. It seems very commonsensical. So it's going to help take care of well, that's for people 55 and older,
Yep.
who generally over time they're going to be on a more reduced income, and so this will definitely be a benefit for
Plus,
them.
everyone's going to benefit, because I mean the realtors are going to benefit. The tax people are going to benefit because more taxes are going to get paid because there's more transactions. I mean, it's just a win-win situation.
And buyers are going to benefit, because really the
Yeah.
problem we have is limited inventory, and people
Mhm.
don't know where to go, and buyers want to come in. So it's really good.
I wonder how they got that passed, because you got taxpayers on one hand who say, wow, well, now we're not collecting this higher tax base because people are able to carry it with them. But at the same time, the benefit is there's more transactions.
Yeah, because otherwise they just say, you know what, forget it. I'm just not going to move. Now what happens?
Yeah.
They just get the same amount that they were going to get anyway.
That's
know?
true.
Yep.
It's just terrible.
And
Yeah.
that's what's been happening. That's one of the big reasons for low inventory. And then again, if you transfer within a family, you can keep the low tax.
Okay.
bracket.
You ready? Time for a break. The audience doesn't know. I slowly slipped my paper up just in front of the camera to let everyone know we have to get to a break. All right, here's our first trivia question. Talking Rock Follies here. What was the first name of the character played by David Cassidy in the 1970 series The Partridge Family? What was the first name of the character played by David Cassidy in the 1970 series The Partridge Family? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Stay with us. You are listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan and Patty Cohen. Nam Phan of Pacific Private Money and Patty Cohen of Compass Realty. Our first trivia question was, what was the first name of the character played by David Cassidy in the 1970 series The Partridge Family?
David.
No, Keith. Keith Partridge.
Yeah.
Come on, you guys are old enough to remember The Partridge Family, huh? All right.
Yeah. I was a Brady Bunch person more than I was Partridge Family. But
I liked it all. The Friday night lineup, I could tell you exactly. Okay. Nam, you want to ask Patty a question about the Prop 19?
yeah, just, we're talking about taxes on the last segment in Prop 19. And so the other part of it, though, Patty, you touched on it briefly, is for passing on a property or transferring properties from family member to family member. So if a parent or parents pass away and they pass that on to their children, with this Prop 19, how does that impact that situation?
Yeah, so it has to be owner occupied. So you can't just take your parents and place and have it as a rental or an investment. It has to be owner occupied, but the kids can live in it and keep that low property tax. So you could be like 34 years old, living in a $3 million house, paying $5,000 in taxes, and it's free and clear. Can I meet that?
Wow. Yeah, that's right. Do you know how long you have to stay in the property before?
No.
Like if you stay in it for a month and then you move out, then they're gonna say, well, no, it's not owner occupied, so up those taxes go. But
right, it has to be owner occupied. So the minute it becomes a rental, it's reassessed, and that's fair enough.
Okay. Yeah. Okay. Interesting. Wow.
That's fair.
Yeah, that's fair. Absolutely. It's just people are going to game the system otherwise if there's some sort of as people do.
Yeah.
So interesting. I think that's going to be good for an already vibrant real estate market. I think this will add to activity.
And I mean, honestly, it might just negate the action in people moving, because it's like, I might as well just keep it and give it to my kids. But again, how much do you have? And how much you want to help your kids versus live your life right now.
And
Yeah, and the
maybe
kids are going to
don't want
squabble over, right?
Yeah.
Or only one of them can live there. I mean, who's going to want to live with their siblings and they're all 40?
I know.
So
That happens.
that'll be interesting.
No, we got
Cool.
Oh, Patty, how do people get a hold of you? They have questions
Oh.
about Prop 19?
Yeah, a question about Prop 19 residential real estate anywhere in the Bay Area. My name is Patty Cohn, C-O-H-N, and I'm at 415-722-4842, and I can be reached at Patty, P-A-T-T-I.C-O-H-N at compass.com, and I'm based in Marin County.
Very good, thank you. Nom, an email comes in for you. It says, with interest rates expected to stay low, does that mean that your fund's interest rates will also expect to remain low?
Yeah, good question. We've been asked this a few times over the last several years on the show, and Mark always gives a really good answer. But I'll try and do the question a little bit of justice. In the past, when you've seen rate adjustments in conventional financing, you'd see some rate adjustments happen over time, a little bit of a latent effect, maybe months later. You'd see some rate adjustments in subprime, what used to be called subprime or non-QM, and then subsequently hard money. You don't see as much of that today, although you do see that. I mean, essentially the question is, if rates go lower on conventional, doesn't that put pressure on rates for hard money or private money to go down? And, as I mentioned in the past, you would see that somewhat because, the cost of capital is cheaper, and that impacts all the way through the different types of lending. But we've seen the rates drop over the last several years, right? Interest rates just continue to go down and down and down to where today you're seeing, rates below 3%, 2.5 to 2 2.75. But hard money rates haven't gone down to the same degree. They have gone down. Our fund returns have been, where they were 5 years ago in the high 7s or low 8s. They're now 7.5% annualized for like the Pacific Private Money Fund. So the short answer is yes, but not to the same degree as you would see, conventional rates go down. And that's just because, money's cheaper. And that creates pressure on yield for not only, companies like Pacific Private Money, but all lenders. But we do a lot of things, though, to keep that rate up. So we ended the year for the Pacific Private Money Fund somewhere around just under 7.5% annualized. It would have been in the 6s, like some of our peers in the industry, but we do things like sell loans that fund loans in the Pacific Private Money Fund, say at 9%, and then sell them to institutional capital at 8%, and that 1% difference continues to come back to the fund while that loan is still being held by the borrower, and that brings capital or income into the fund that helps boost the return. So short answer is, you will see some rate compression over time, but not as big of a difference that you see in conventional lending.
All right. And how do people get a hold of you if they have questions?
If they want to get a hold of us here at Pacific Private Money, they can call 415-883-2150, or they can go to our website, which is www.pacificprivatemoney.com. And I should add to that too, we have different kinds of funds now as well. And the different funds, some of them, because of the type of borrower, the type of asset, aren't as impacted by conventional lending rates. Like we may talk about the Pacific Southwest Note Fund later. You're not going to see those rates impacted much because we're buying loans that have been performing for years with rates that are locked in and have been locked in for years. And then in construction lending, there really isn't a parallel between conventional bank rates and construction loans.
Yeah.
So we can talk about that a little bit later.
All right. Hey, Patty, can you stay with us for a little bit in the next segment? Okay. All right. We're going to cut to our next commercial break here. And we're talking Rock Follies. In the 1960s television series The Monkees, the band was living in which state of the U.S. while trying to break into the big time? And extra bonus points impression if you can name the city also. All right. Call 888-912-1190. The first caller with the correct answer wins the tanning certificate, which is worth over $100. And the question here it is again. In the 1960s television series The Monkees, the band was living in which state of the U.S. while trying to break into the big time? And also bonus points if you can name the city. You guys remember the TV show?
Oh, definitely.
I love the
Yeah,
band.
great.
Man, they're great.
Yeah.
Hey, with the
Hey, with the
monkey.
Monkees. That's right, exactly.
Yeah.
Yeah, in fact, Peter Tork, I think, died last year. Sad. And
Yeah.
Davy Jones,
Hmm.
a couple years before that, the young, you know.
Yeah, he was the cute one.
Yeah, he was the cute one. That's right. Okay, all right. Stay with us. You're listening to The Best of Investing. We'll be right back. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan and Patty Cohen. Second trivia question. In the 1960s television series The Monkees, the band was living in which state of the U.S. while trying to break into the big time? What state were they?
New York.
Nope.
I know. I want to say Ohio or New Jersey. I don't know why.
California.
L.A.
Close. Malibu.
Oh man, I was going to
Yeah.
say that. I was like, it's too obvious.
Yeah, I know. Can you imagine Malibu back then compared to now? I'm sure it's increased in value just a little bit.
Yeah.
All right. So Patty, seller's market, buyer's market.
Well, it's a crazy seller's market. And yes, the year just ended, but seasonality curves have really flattened in general over the last 10 years. But even with COVID, they're just flat. You know, pretty much all year round, people want to do something unless it's a major holiday. So I find that people are sort of buyers are a little bit giving up. Like there's just nothing to show them.
Mm.
You might have like 50 potential buyers for one property.
That many.
Wow.
Not that so many are bidding, but they're just going, this is nuts. I'm not even going to try. Or like, people come and they ask me for whatever. And I'm like, well, that's what everybody wants. And it's hard to find this stuff. So I think things have got to loosen up. I think that what's going to happen is there's going to be more inventory the second half of the year. Interest rates are going to shift a little bit. We have Prop 19. I think it's healthy to get some stimulation with more listings. So if anybody's thinking about selling, talk to me. I can help you.
Do you think
Now's the time.
Yeah,
Yeah.
vaccine. How do you think like more vaccinations out there are going to affect the market?
It's too hard to tell. I don't know that it's going to make any difference.
Okay.
I don't think so.
You wonder, more people out there feeling okay about going to visit open houses, that sort of thing. I don't know.
Maybe.
Yeah. Are you still doing, are people still touring houses as much as they were before? Or are they making offers sort of sight unseen, or they're still just making appointments to get into a property?
It's all by appointment and, one
Yeah.
buyer at a time, but there are fewer buyers, and the buyers that are out there, like let's quote buyers. I think a lot of the quote buyers that were out there before weren't really buyers. They were just kind of tire kickers, or let's go to an open house. I don't even know that open houses will ever come back to the extent that they were, because the secret that realtors have always known is that open houses don't sell houses. So
Right.
The brokers opens, yeah.
we don't really need them, do we? So, but at the same time, so all those buyers that went to open houses, they weren't really buyers. So right now, people are generally going to look at a house and then they make an offer on it and they buy it. And they see it once, maybe afterwards, and that's it. And it's kind of a nice way to do business, really, because and it's less drama during the escrow because the seller and the buyer are both motivated and they want to do a simple transaction,
Yeah. It's funny. I remember, this is going back 25 years. There was at least 25 years. There was a guy who was selling development housing. And before this one person put in a buyer or put in his offer, he said, I've got to have my counselor, or whatever he called him, come at nighttime. And he goes, why? He goes, well, feng shui. He wants to see where, how the sun comes to the light. And it's funny. And I used to laugh at that, but then I thought, you know what? It's not that crazy. Of course, it depends on what time of year you go, because winter is going to be different than summer. And, northern exposure house versus southern, it kind of makes a difference.
Yeah. Well, there was a very, very short-lived HTV program called Sleep on It, and that Meatball song was "Baby, Baby, Let Me Sleep on It." And I was featured. Yeah, it didn't last long, and I was featured in 2 of them. And then they actually let the potential buyer, sleep in the house one night
Yeah.
to really feel what it's like to wake up there, to spend a night there. You know, are there howling dogs? Is it beautiful sunrise that you didn't even expect? You know. So anyway,
Yeah.
but I mean that'd be ideal. Let me live there for a week, but it's kind of
So, I mean, a couple things. Are people buying homes a little bit more sight unseen, or maybe spending less time in the properties as before? Are you hearing about people who bought a home and then months later saying, you know what, this is not what I wanted? Or
no.
no.
Really?
No.
That's good. That's
Because
really
people do
good.
their homework. I mean, if somebody were to do that 25 years ago, you know, everything's available now on the internet. Before, you really
Yeah.
didn't have a clue about much. And it is this
Right.
price, and people, and now also sellers get inspections up front. So everybody knows everything beforehand, and you know the neighborhood. People, buyers shop, they drive the neighborhood. So there's not a lot of mystery.
Hopefully there's no fraud going on with inspections, you know. Seller kind of hires some charlatan guy, you know. Shh, don't say anything about the termites, you know.
Nobody, you know, that they're risking jail and their license. And then if a buyer, a lot of times buyers still get inspections.
Yeah.
But it taught, bottom line with seasonality, February is the best time to sell. I've looked at seasonality graphs for 40 years, and they basically are pretty like level, the buyer and the seller, inventory and demand. But in February, there's less to sell and more buyers out.
Yeah, because
It's
that's
the
I hit
best
the
time.
spring market, right?
Yeah, because everybody thinks, oh, the sellers think they look prettier with their flowers in the spring, and buyers are like, they're, you know, January's over and let's go buy a house.
Yeah, but we can get a good deal before all the other spring people.
That's
true. Yeah, that totally makes sense. All right, we've got 2 minutes before we have to cut to our next break.
I have a question. So are you getting many people asking for referrals for Tahoe realtors, like clients who?
Yeah. There's a lot more referrals going on than I've ever seen. You know, I've gotten a couple referrals from people down south, people from Portland to here, a lot of people going up to Tahoe, a lot of second homes.
Yeah.
People still have money, unfortunately.
Yeah. We're going up there in a few weeks, and I'm wondering if we'll be welcome as Bay Area visitors to Tahoe, because I think they're getting tired of, even though a lot of them were Bay Area, you know, homeowners.
You're
probably getting tired of the crowd.
Airbnb?
Vrbo. So we're doing or VRBO. Yeah.
How nice.
So,
well, I would say the place where the place where more people are going than anywhere is Texas. And there's bumper stickers saying, "Don't Californiaize Texas." Yeah. And I saw something on Facebook the other day, and it was a Realtor of the Year, Texas.
Yeah, Gavin Newsom.
Picture.
Yeah.
Governor Newsom.
Oh yeah, listen, Austin is crazy.
Austin's crazy.
Yeah. Third trivia question is, I'm talking Rock Follies here. An animated television series featured a band called the Pussycats with a lead singer with which name? Okay, call 888-912-1190. Okay, I'll give you a hint. It's something and the Pussycats.
Oh, yeah.
Right? Okay.
Oh, I think I know.
See, now you know. It's all I had to say was that. An animated television series featured a band called the Pussycats with a lead singer with which name? All right. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate, and stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Nam Phan. Patty Cohen had to drop off. An animated television series featured a band called the Pussycats with a lead singer with which name?
Was it Jesse?
Josie.
Josie. Josie and the Pussycats. Josie is a much better name than Jesse and the Pussycats.
Yeah, for a girl, sure. So, Nam, do you have a deal of the week for us?
You know, actually, just the general deals of the week. Boy, I'm doing these shows like once a month now, so I like to bring up specific deals when they're interesting, but sometimes I like to talk about certain trends too. And you know, we continue. This is no surprise. You know, we're continuing to do a lot of bridge loans, or the whole space or category of buying before you sell
Yeah.
is, blown up so much. And it's just a phenomenon that's really not going to change in the next 10 years, especially with, the demographic that, we started the show with, which are sort of boomers who are looking to downsize. The nice thing is, that with Prop 19 is that they can carry this tax basis with them. But there's still the issue of them being able to get into their next home or buy it, whether or not they need if they need a bank loan, but being stuck because banks are telling them that they need to sell their departing residence first.
Yeah.
Nice thing is they can carry the tax basis once this happens, but it was, I think, 2 or 3 years ago where the statistic came out that over the next 10 years, you're going to see this huge migration of boomers who are going to be moving down or moving out of state or downsizing. And we're only in essentially year 2 or 3 of that. So, and now we're approaching, a huge population of people who are moving down. And you can see that in the loan activity and the kind of real estate activity Patty sees, which are people who are wanting to leave California, go to Texas, or go to a lot of other states with lower cost of living, lower home prices, and so they're coming to Pacific Private Money for bridge loans. That's continued. I mean, our bridge loan activity went from being maybe 10% of the loans we did a few years ago to being up to 40%.
Wow.
Maybe approaching 50%. But you're also seeing a lot of competitors entering the market space. And this I'm bringing up because if you're a realtor listening, these competitors are trying to be real estate companies who will say, listen, homeowner, I'm going to buy your next home for you. And I'm going to go in and make an all-cash offer for you so that you don't have to, get a loan. We're going to be the buyer on your behalf, and then we'll sell the home to you. And why would we do that, or why would you work with us? Well, it's because there's a certain guarantee that you'll get that property if we're going in and making all cash on your behalf and then turning around and selling it to you. Plus, we'll sell your home for you. So we'll be the buyer of your next home, sell it to you, and then we'll sell your current home, and then we'll make that transaction easier. But if you're a real estate agent, that's your competition, because that's taking a client away from you, and you need to be armed with tools to combat that. So a bridge loan will keep you, the realtor, in the middle of the transaction, because now you can represent that client for the purchase, and they can get a bridge loan through us, and then you can represent them on the listing.
Are these companies, they're not using real estate agents?
No, they actually are the real estate agent and the real estate company, and they're going to say, listen, we're just going to buy a home. We're going to buy 123 Main Street in our name, and then we're going to sell it to a client who's approached us to sort of represent their interests in the purchase.
So they're really bypassing all the real estate agents in a way.
Yeah, because they're operating as a real estate company.
Yeah.
And they just have the money to buy the home instead of making the client go out and get a loan. Now, that homeowner still needs to get a loan. And so there's real estate companies now who are saying, well, use our mortgage arm to get a loan from us, so you can buy the home from us too.
Yeah. They still have to qualify, though, probably, like they would.
Yeah, they still have to qualify, but it helps. Yeah. It helps that there is a benefit to the home buyer because they don't have to worry about making an all-cash offer or financing up front. Somebody else is going to go in and make the offer, buy the home, but there's a contract between that real estate company and that buyer that the real estate company is going to sell the home to them.
Boy, that is kind of compelling, though, especially if they're going to guarantee to buy it for a price that you feel is comfortable, right?
Yeah. So there's some convenience there, but does it cost you anything? Does it cost more or less to do this? At the end of the day, it costs about the same, or maybe a little bit more because you're paying for convenience. So as a real estate agent, though, if you're not that company, then how are you going to compete? Yeah. And a bridge loan is the way to do it. And actually, sometimes we end up lending to these real estate companies who are buying these homes too. So, Pacific Private Money can do okay in either scenario.
Yeah.
But we want to be, provide realtors with the tools to compete in this kind of
So
market.
you tell me that these real estate companies that are in competition with the agents are coming to you guys for money?
We've done a few, we've done some lending to them. As we grow bigger, we're able to, to provide a capital source to the company. So if you're that real estate company.
Yeah, you think they'd be big enough to either get a bank loan or have it all cash?
Yeah, there's a lot of models out there, and they're really trying to tap into this tied up equity that people have that they can't utilize until they've sold their home. So this is kind of a problem that a lot of people are offering a solution to right now. But at the end of the day, getting a quick loan and not it can actually still be the easiest way to do a purchase.
Okay.
So
we've got a couple of minutes before our break. Tell us about the other funds you have.
Yeah. So we talked a little bit about the Pacific Private Money Fund and how we ended the year at just under 7.5% annualized for the entire year. Behind that, just in the other funds that we launched this year, going in reverse chronological order, in September we launched the Pacific Southwest Note Fund. Or was that August, Edward? August. That is a fund that's our first out-of-state fund. So it's taking advantage of opportunities in Texas to buy what are called seller carryback notes. That's a fund that's paying a target return of 9 to 12%. And that's doing quite well. We're actually oversubscribed, but there's opportunities, and demand is picking back up for filling the loan pool there. Next fund after that is the North Star Capital Fund, and that's a fund dedicated to ground-up construction. That one, the target return is 8 to 10%. That one launched in July, and it's also paying above target returns. And then the fund that we launched at the beginning of last year, or Q2, is the Pacific Freedom Fund. That one pays a flat 7%. And it is a fund that we use as a quasi line of credit where we're funding loans and then selling them to institutional investors. So the range of the returns, there's kind of a flavor for everyone, anywhere from 7% fixed annualized or per year to upwards of 12%. So 7 to 12 is the range of our four funds. And to learn more, give us a call at 415-883-2150.
Very good. All right, we're going to cut to our last commercial break. No trivia question, but when we come back, we're going to have some closing comments. So don't touch that dial. Don't go anywhere. Come right back to The Best of Investing. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. No trivia question, but Nam, you have an event coming up, don't you?
Yeah, we have a fund information session. This one is Meet the Managers. That's what this next one is called, and it's on Wednesday, February 10th, which is coming up this coming week at 6 p.m. And if you go to our website, go to www.pacificprivatemoney.com, go to the events section, and you can register for the event. It's from 6 to 8 p.m. and essentially it's Meet the Managers of the North Star Capital Fund, which in the last segment I touched on. It's the ground-up construction fund, target return of 8 to 10%. Minimum investment in that fund is $100,000, 1 year hold. And essentially that fund is used to make loans to builders and developers. Housing is still a vastly underserved or under inventoried in California, so the demand for housing is as strong as ever. The ground-up construction fund, the North Star Capital Fund, is designed to provide the capital to developers and pay a very healthy return to our investors. So go to pacificprivatemoney.com and then click on the event section. You'll be able to see that. And then we'll probably have another event in March. We want to ramp up at least having more virtual events, and then I would love to announce soon some sort of live event, but we've got to make sure we're in the clear. It'll happen sometime this year. I'm optimistic, and I'm hoping we can squeeze in like 2 live events before year's end. That would be a great goal. There's so many investors that we've talked to in the last year, 2 years that we've never met. So yeah, I think we'll have really good attendance, just because people will want to see other human beings. Oh, there's an event too?
Yeah, and well,
What are you guys talking about, by the way? I just heard that there's going to be a crowd. I don't have to wear a mask.
well, they've some of these people, like you said, they've invested after doing some due diligence, and they felt comfortable enough, even though they haven't met you in person. I guess you could do Zoom events, and that's kind of
Yeah, we've done Zoom events. I did one with a couple who live up in Shasta, and that was great. And I've done a few other ones, but that's always an option for people.
Sure.
At the end of the day, though, we like to meet people face to face, and vice versa, especially when they're making such big investments. So, always excited to meet people face to face.
Good. And as a reminder, no fee to get in, no fee to get out on any of the funds.
That's right.
You pay monthly
correct.
distributions, except for North Star pays quarterly, right?
That's right. And then investors do need to be accredited, which is having $1 million net worth or annual income of $200,000 as an individual, $300,000 as a couple. But also last year they passed legislation that depending on what sort of a profession you're in, so if you are in a certain professions like an attorney or a financial advisor, then you can qualify as accredited. So that was a nice change.
Yeah, and that accreditation, the $1 million, is exclusive of your personal residence.
Exactly.
Okay, are you ready? Today I've got some puns for the day instead of thoughts for the day. Okay?
Yeah,
all right,
please.
Here we go. Why did the Cyclops close his school? He only had one pupil.
Oh, God. I'm using that in 10 minutes.
Yeah. Okay, and here's one. So the wife texts the husband on a cold winter morning. Windows frozen, won't open. Husband texts back, pour some lukewarm water over it and then gently tap edges with hammer. Wife texts back 10 minutes later, laptop really messed up now.
Oh, no.
That was pretty good, too. All right. Well, non-fun, again, how do people get a hold of you if they have questions about any of the funds or want to sign up for the seminars?
For the event? Yeah. So they can give us a call at the office here, 415-883-2150, or they can go to our website, which is www.pacificprivatemoney.com, and then click on the event section. Also, if you click on invest, it goes into details about the various funds too. So if you can't make the events, you can always check out the website.
Very good. All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.